Hello, I am Jessica Ewell, the Chief Financial Officer of Royal Dutch Shell. Today, we announced our quarterly financial results. Let me give you the highlights. The first quarter 2017 was a strong quarter for Shell. Our first quarter 2017 earnings were $3.8 billion on a clean current cost of supplies basis. Cash flow from operations was around $9.5 billion. Free cash flow of more than $5 billion enabled us to reduce debt and cover our cash dividend for the third consecutive quarter. The strategy we've outlined to deliver a world-class investment case is taking shape. Following the successful integration of BG and through consistent and disciplined execution of our strategy, we push ahead with transforming Shell rapidly at all layers. This includes investing $25 billion this year and some $10 billion of cash flow from operations by 2018 from the delivery of startups since 2014. Now, returning to our first quarter results. Upstream underlying earnings were more than $500 million, an increase of some $2 billion from year-ago levels. This is a large improvement and includes an increase of more than $1.5 billion driven by higher oil and gas prices. Thanks to favorable market conditions that we were able to leverage, the ramp-up of Gorgon, the contribution of BG assets for an additional month, and increased contribution from trading, our integrated gas earnings at $1.2 billion were some 19% higher than Q1 2016. This was despite the adverse impact of the controlled shutdown of our Pearl GTL plant in Qatar and the accounting reclassification in Q2 2016 of Woodside. Downstream earnings were $2.5 billion, almost 25% higher than year-ago levels, driven mainly by our chemicals business, which was up more than 100% from year-ago levels. We completed $5 billion of large divestments in 2016, and during the first quarter, we announced several large transactions, over $15 billion in the last 4 months alone, reaching more than $20 billion of the $30 billion divestment goal we set for ourselves. We are on track to deliver on the 2020 expectations set out at the Capital Markets Day last year. 2016 was a transition year, and 2017 is a year in which we will follow through on the delivery. This is not just about managing the down cycle. This is about transforming Shell through the reshaping of the portfolio and a structural change in our culture and our ways of working. We want Shell to be more competitive and resilient through the cycle. I think that by doing a better job on delivering higher and more predictable returns and free cash flow per share, and underpinning all of that with a conservative financial framework, we can create a better investment case, a world-class investment case. Thank you.